Hey there, I'm estate planning attorney Paul Rabelais, and in this video I'm going to reveal the new gift and estate tax updates, and I'm going to share the most common comments and questions we hear after someone learns about the gift and estate tax. So toward the end of each calendar year, the Internal Revenue Service announces both the gift tax exclusion amount and the lifetime gift and estate tax exclusion amount for the upcoming calendar year. For the year 2023, the IRS announced that the amount that you can give away per recipient without using any of your lifetime gift and estate tax exemption is being increased from $16,000 to $17,000. This means that you only have to file a federal gift tax return, also known as Form 709, if you make a gift to someone that exceeds $17,000 in value. This also means that married couples generally can give $34,000 per year per recipient in 2023 without any kind of gift or estate tax consequence. For example, if a married couple has 2 children and 4 grandchildren, they could, between the two of them, donate $34,000 to each of the 6 descendants, or a total of $204,000, without either of the 2 donors being required to file a gift tax return. These donated assets will then not be subject to the potential 40% federal estate tax when the donors subsequently pass away. Now, if someone makes gifts in excess of this $17,000 annual gift tax exclusion amount in 2023, they will use a portion of their lifetime gift and estate tax exemption. And while I've helped many people arrange their estate to avoid federal estate tax, most people don't have an estate that will require federal estate tax to be due when they pass away. In fact, it can get awkward when someone talks to me and says something like, "Paul, we want you to help us avoid this death tax or this estate tax, whatever you call it. We've worked hard, Paul, to accumulate an estate that is worth about $1.5 million, and let's do whatever we need to do to avoid this tax." Well, the sometimes awkward part is when I have to say, as long as when you pass away under 2023 law, as long as when you pass away you have less than $12.92 million, or if you're married, $25.84 million, federal estate tax is something you just don't have to worry about. Now, it's a good awkward situation because the result is that I just help someone understand that they will be able to pass along their estate to their survivors intact, but it often elicits one of several responses that I'll get to in a moment. But nonetheless, the IRS announced that the gift and estate tax exclusion amount for 2023 is $12.92 million. The gift tax exemption of $17,000 and the estate tax exemption of $12.92 million are linked in that when someone makes a taxable gift, one that exceeds $17,000 in 2023, it will reduce the amount that that person can leave at their death estate tax-free. While most people say the $12.92 million estate tax exclusion amount doesn't apply to me, it's worth noting that this amount will continue to creep up in 2024 and 2025 based on inflation adjustments. And then in 2026, the estate tax exclusion amount is scheduled to be cut in half for estates of people who pass away on or after January 1st, 2026. Now, there are a few common reactions and a few common questions I hear over and over again once I reveal these gift and estate tax laws to people. First, I'll go through the typical reactions we hear after revealing the gift and estate tax laws to people, and then I'll go through the questions and my answers that typically get discussed. First, the common responses that we hear when we tell people that the first $12.92 million that they own when they die is exempt from federal estate tax. First one, that would be a nice problem to have, but we don't have that problem. So that's probably the most common reaction. Second, we'll contact you when we win the Powerball lottery. Hear that one a lot. Third, I hear people say, I'm kind of blown away that there is a tax on a gift. Yep, if you give something away to someone, if it's worth too much, there's a gift tax. 4, we hear, can't wait until I get 12 million, but first I got to get 12 million. And then 5th, we hear, the kind of sarcastic, if anyone out there would like to avoid estate tax, you can give me $17,000. So we hear that sometimes. And then there's the people who are a little bit bitter who will make a comment like, the rich always find a way to get around paying tax. And then there are all the questions that people ask when they learn about our gift and estate tax system. Some of the questions are, first, are you sure that no one pays tax on gifts over $17,000? It's like they're questioning whether I understand these things after going to law school and earning a master's degree in tax law and then helping people for 30 years. Yes, I'm sure. There is no income tax on a gift regardless of its value, of the value of the gift. The second question is, if I sell to my son my house for $100, does that get around the gift tax? And the answer is no. If you sell a $400,000 home to your son for $100,000, then you've just made a gift valued at $399,900. So it's the gift, the difference between the sales price and the fair market value of what was transferred is a gift. Third, I hear sometimes, since I have a beneficiary on that account, is it in my estate and subject to estate tax when I die? Answer is yes. Your IRAs that you own, the life insurance that you own, the annuities that you own, all those assets that you own, even if you have a beneficiary designated who will immediately get those funds when you pass away upon producing a death certificate, those funds are still part of your estate subject to the federal estate tax. A fourth question we hear is, why are you even telling us this if it doesn't apply to 99+% of us? And my blunt answer is that even though you have an estate worth only $1 million, $2 million, I need to tell you about the estate tax that affects people with $13 million plus so that we can rule out having to maneuver assets to get around it. 5th, we're asked, is the 40% tax on the part just over the threshold, or is the 40% does the 40% tax apply to all of the estate once you get to $12 million? So the answer is, it only applies to those assets that exceed $12.92 million. If it's a 40% tax and somebody dies with $13.92 million in 2023, only $1 million of that would be subject to the 40% tax, or $400,000 of federal estate tax would be due 9 months from the date that person passed away. 6, we're asked, how is it legal that the government taxes already taxed money? Isn't that double taxation or triple taxation? My only answer is it's legal because Congress makes the rules and Congress says it's legal. Then 7th, we're asked, doesn't the recipient of the gift have to pay income tax? Boy, we get that question a lot. So no, again, I've already repeated that in the first question. If you received a gift, whether it's less than or more than this annual exclusion amount of $17,000 for 2023, the recipient of the gift doesn't pay income tax on that gift, nor does the donor, the person who made the gift, get to deduct that in any way from their income for purposes of their income tax reporting. And then 8, probably the best question of all that I hear is, what if you use your $12 million exemption during your lifetime and then you die when the exemption is lower? Well, based on fairly recently issued regulations, you'll get the exemption that applied, the larger that applied when you either made that big gift or the exemption at the time of your death. So they won't claw back that large gift that they made if they reduced the exemption after you made that large gift. Question number 9. Does the gift tax exemption only apply if you give to children? Yeah, I used an example that said, let's say mom and dad give to their 2 children and their 4 grandchildren. They could get $204,000 out of their estate. But gift tax annual exclusion doesn't apply just on gifts to descendants or even relatives. You can, if you want to, give $17,000 to your friends, whoever you want to, and it's not a rule that applies just to the gifts to children, grandchildren, or other descendants. Next, what if the donor makes a taxable gift, one more than $17,000 in 2023, and doesn't file a gift tax return? Well, the big time penalties for failing to report a gift of interest that just continues to accrue don't apply. It's kind of an odd situation unless gift tax is due. And gift tax is due only if you've made really large gifts in a way that you've used up your entire $12.92 million gift and estate tax exemption during your lifetime. And then you make further gifts that require gift tax to be paid. So there's often no real financial penalty for failing to file an IRS Form 709 when it is required that you report a gift. Next question. Does it matter if the gift is green cash or under the table or a shoebox full of cash? No, it's a voluntary, or people ask, how's the IRS going to know that? Well, just like filing your income tax is a voluntary system, the gift and estate tax is also a voluntary reporting system. So if you give a bunch of cash to someone, you are, and especially if that amount exceeds the $17,000 annual exclusion, you're required to file a gift tax return. And then a question, what if I buy a car for my daughter, or I buy a car and then I just transfer title to my daughter? Well, it's a gift. Whether you write a person a check or give them cash or put a car that you own in their name or buy them a car and have it put in their name or buy them a piece of land or give them a piece of land, all those are gifts subject to the gift tax rules. Next question, is there a birthday and Christmas gift exception? So some people think if they give their children $10,000, $20,000, $30,000 as a Christmas gift or a birthday gift, then the gift tax rules really don't apply. There is no exception for Christmas gifts and birthday gifts. Next question, does this apply to gifts in trust at all? So many people don't like they like the concept of getting assets out of their estate to avoid estate tax, but they don't like the idea of just writing a check to their child, to their grandchild for $17,000, for $34,000, because that child or grandchild may not do the right thing with that money. So many people make those gifts into a special kind of trust. I've made videos on crummy trusts before. And so you can either make those gifts outright or you can make those gifts into a crummy trust if you want to maintain a little more control over that gift after you've given it away. But the same rules apply whether you make those gifts outright versus in trust. Next, does a gift reduce your taxable income? Mentioned that before. We get that a lot. No, it doesn't. There's just no correlation between the gift tax and the income tax. So the bottom line on the federal estate tax is it doesn't apply to most people. And most people don't know it doesn't apply to most people. So we have to spend the time and effort to educate people that it generally only applies to people who have an estate that exceeds $13 million. And then once people get educated, they often either have somewhat sarcastic comments or they have some questions because they get confused thinking that the income tax and the gift and estate tax are somehow related. And even when I'm having discussions with people about estate planning and we discover that federal estate tax is just not an issue we need to deal with, there are many non-estate tax related issues that we do address, such as making sure the right assets go to the right people the right way, making sure the right people are appointed to handle things for you or your estate in the future, and minimizing or avoiding probate and other government interferences. All those things play a role in protecting your estate for yourself and your loved ones. So if you have a comment or a question related to the federal gift and estate tax that hasn't been addressed in this video, feel free to put it in the comments below. Have a great day.